love to expose everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What up, everyone? It's your girl, Superwoman.
I know we can change the world for the better, one positive day at a time. My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where's the rest of your skirt, huh? I teach you like this to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done. but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera, that is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. Yes. So at some point we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
mean to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets, rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Jason Kelly on Bloomberg Radio.
Live from New York, both the burbs and the city, I'm Jason Kelly. Welcome to Bloomberg Business Week. Scarlett Fu, hi.
Hi, it's such an honor.
It's so much fun to have you here. I'm excited about what's going to happen this week.
I'm sitting in the news studio. I mean, it's not new for you because you've sat here for a number of years, but for me, it's the first time here, and it feels very spaceship-like.
It is a spaceship. You may take off, just be forewarned. Over the next few hours, we're going to have a lot of fun. So much news to get to. Let's understand what's going on in this trade, though, because it's a green day. A lot of optimism. Maybe the Jay Powell will save us once again. Let's understand those numbers. For that, we turn to Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Jason Kelly, and thank you very much. Good to hear Scarlett Fu with us, and happy Monday to you all. Stocks rising on speculation right now. The resurgence in global coronavirus cases will make the Fed reinforce its dovish message. Of course, we do hear from the Federal Reserve on Wednesday. Gold trading at a record. The dollar fell. S&P rebounding from last week's drop as a rally in tech shares offsets a slide in banks. Here's where we stand. S&P 500 index up 17, up 0.5%. In the year-to-date column, S&P higher once again, up by 0.1%. The Dow's up 70, up 0.3%. NASDAQ up 125, up 1.2%. 10 years down 230 seconds with the yield of 0.59%. Gold up 2% right now, $19.40 the ounce on the precious metal. West Texas Intermediate crude also higher, up 0.8%, $41.63 for a barrel of West Texas Intermediate crude. Recapping, S&P now up by 17 points, up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So much to get to, but let's understand what's going on in the trade today and what we have to look forward to this week, Scarlett. We are going to set the Business Week agenda. We've got Gina Martin-Adams with us, Chief Equity Strategist for Bloomberg Intelligence. She joins us from New Jersey, as does Dave Wilson, Stocks Editor for Bloomberg. He's also in the Garden State. So, Dave, quickly set the stage for us. What's underneath this trade?
Well, you look at the 11 main industry groups in the S&P 500, and it looks rather familiar. Technology stocks kind of leading the way. You look at the consumer discretionary category, which is basically Amazon.com, and it's up. So kind of a familiar story. Communication services, which is Facebook and Alphabet, the owner of Google, also higher. And, it's really their week, those kinds of companies, because, you talk about the $4 trillion companies in the S&P 500 based on market value. You have 3 of them, reporting on the same day, coming up on Thursday. I'm calling it a AAA afternoon because you get Alphabet, the owner of Google, and Amazon.com and Apple. It just goes to show you what kind of week it's going to be. Something like a third of the S&P 500 companies reporting today. Pretty quiet on that front, but it really does pick up tomorrow and carries through the rest of the week. So, it isn't just about the Fed policymakers getting together. It's about what companies are going to have to say on their results.
Absolutely. Technology is going to be front and center this week, but it's interesting because when I look at the most actively traded stocks by value and I look at foreign common stocks, 9 out of the 10 most actively traded stocks are all gold miners or precious metals miners, and that speaks to the rally that we've seen in gold prices. Gina, material stocks certainly in favor right now as people continue to bid gold and silver prices higher. Do we have any sense of whether this will be reflected in their earnings?
Probably not. I mean, I think it's a bit early to expect that the companies are actually going to produce earnings results as a result of the price action in gold. So I do think that the materials sector is most likely to be one of the weaker sectors within the S&P 500 in terms of actual output from an earnings perspective. That said, I do think that if you start looking at value names in the S&P 500, you could have an opportunity for a lot of beats to expectations. So if you think about the sort of value styles in a broader set, I've got 15 stocks on a list of stocks in our high value bucket, as well as the S&P 500 Pure Value Index that report this week. All of them are expected to have just really, really weak earnings, just kind of tremendous declines, some of them even with negative earnings. And as a group, they're starting to experience positive estimate revision, which is very different than what Dave was talking about with the big heavyweight tech companies facing a completely alternative with higher expectations going into their earnings. It's less likely that they can sustain those expectations, whereas some of the value stocks actually might be able to beat very, very low forecasts.
And so, Gina, I believe you told us last week this is the single busiest week for earnings, right? This quarter, this week that we're headed into?
It is. Yeah, there's not going to be any rest for the weary this week.
Yeah, so what's the key theme for you beyond what you were just describing and the tech importance here?
Yeah, so it's a combination of things. I mean, I think one thing that happened last week that really, quite frankly, surprised us is for the first time in a long time, despite the fact that every tech stock that reported earnings last week beat expectations, price performance was negative. So I think I want to watch that really carefully. Can tech stocks actually live up to expectations, or have we gotten a little bit ahead of our skis and investors are going to sell the news on both tech as well as healthcare and some of the growthy stocks? The opposite may occur with respect to value. I think beyond earnings season, there's more than just earnings, even though this is the heaviest week of earnings and next week is the second heaviest week. We're obviously also contending with the Fed policy meeting this week, and we're contending with this fiscal package, which we keep bumping around as a possibility or not a possibility. And I think that has the prospect of creating a little bit of turmoil for stocks as well.
So, Dave, when we talk about the Fed meeting this week, do you sense a change in tone or in sentiment when it comes to what the Fed will likely say? Obviously, the environment around us has worsened with the increase of cases across much of the United States. How much of that is reflected in people's expectations of what they expect to hear from Jay Powell?
I run across a whole lot on that score at this point. You know, I mean, given that there's sort of a policy direction that's been set, you know, near zero interest rates and some bond buying, though they backed off lately in terms of actual purchases, you know, trying to throw money at the economy where they can. I mean, it does seem like, if anything, they'll try and redouble those efforts, but at least the policy direction has been set, and what we may get Wednesday just will sort of reinforce where we are when it comes to what the Fed's up to.
Right. All right. Well, thank you both so much. Gina Martin-Adams, Chief Equity Strategist for Bloomberg Intelligence. She joined us from New Jersey, as did Dave Wilson, Stocks Editor. He'll be back at 3:30 for his chart of the day, and just after the close for his stock of the day. We got a lot to do today. Scarlet Fu, we are going to be keeping an eye on that fiscal potential announcement from the GOP about what they propose to do, and then we'll see what the Democrats have to say. I mean, this is the contentious issue of the week, right?
Yeah, and it's a huge chasm between what the Democrats have proposed and have been waiting on and what the Republicans have managed to put together. And even within the Republican conference, they can't agree on a lot of different elements. So we know that Steve Mnuchin really pushed forward with some kind of compromise, but the big unveil will reportedly be later on this afternoon after the market closes.
And we will bring it to you live. We're also going to check in later in the show with the Dean of Stanford's Graduate School of Business. Of course, that's the #1 business school 2 years running, according to Business Week. He's going to tell us about plans related to diversity as well as reopening in the fall. Plus, talk a little private equity. We love doing that. Talk about reviving brands. This is an investor who's worked with everybody from Stuart Weitzman to Crocs, Scarlett. So,
didn't you write a story not so long ago, Jason, about how private equity owns the world, basically?
They do. They do. It's true. It's true. For better or worse, that's where we are. All right, let's do the Bloomberg Business Week bite of the day. One number that tells us a lot. Today's number is 19. U.S. Northeast, this is no surprise to any of us who are here. We'll get a string of hot days this week and daily records going back to the 19th century that could topple in Manhattan and Boston today. The high in New York Central Park could reach 97 degrees Fahrenheit, 1 degree shy of the record set in 1869. I have to say, and, you know, car thermometers are hinky, Scarlett, but I had to run an errand midday. I got into my car, was parked outside. It's 106 degrees.
Oh, yeah.
Said.
Looking
Crazy.
at the car temperature inside is always a hoot because it'll say 110 degrees easily.
Exactly. All right, let's get down to Washington now. Nancy Lyons is there. World National Headlines. Hey, Nance.
Hey, Jason. The world's biggest COVID-19 vaccine study is now underway, with the first of 30,000 planned volunteers being given shots to test Moderna's vaccine, co-developed with the National Institutes of Health. Moderna's CEO, Stefan Bancel, spoke with Bloomberg about distribution plans if the vaccine proves effective.
We have said all along, we do not intend to maximize profit on this vaccine. It will not be the right thing to do from an ethical standpoint. And we want to make sure that the vaccine is available to everybody who is looking for vaccination.
AstraZeneca and Pfizer have also created vaccines that have shown favorable immune responses. Another member of the president's inner circle has tested positive for the coronavirus. Bloomberg's Amy Morris has more on that from Washington.
President Trump's national security advisor, Robert O'Brien, tested positive for COVID-19, the highest-ranking administration official to have contracted the virus. One of the president's military valets and the vice president's press secretary tested positive weeks ago. Sources tell Bloomberg News O'Brien came down with the virus after a family event and has been out of the office since last week. It's not clear how recently he's been in close contact with the president. For now, he continues to conduct work from home by phone. In Washington, I'm Amy Morris, Bloomberg Radio.
Well, in a move that could open the door to job cuts, Goldman Sachs is reportedly adopting a performance review system that grades up to 10% of its employees as underperformers this year. Reuters is reporting only 25% of the staff will be graded as exceeds expectations. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thanks so much. You are listening to Bloomberg Business Week. So I have to say this story was interesting to me, Scarlett, because you sort of wonder with all these bans and rules and laws how things are going to be enforced. I guess a couple of owners of gyms in New Jersey, they got the answer to that.
Yeah, Ian Smith, who's 33 years old, of Delanco, New Jersey, and Frank Trombetti, who's 51, of Williamstown, they were arrested for continuing to keep their gym open even after being told by the governor to close it down. They're charged with fourth-degree contempt, obstruction, and violation of a disaster control act. They could get fined up to $1,000 and face potentially 6 months in jail.
Yeah, I mean, what's fascinating about this is it's being highly politicized, and I bring that up only because they've been on Fox News a lot. They've raised some money for their legal defense, basically saying that they should not be, people who want to work out, they should not be subject to these laws. I don't think this is the last time we're going to see this sort of argument taking place.
No, the gym has a Facebook page, and they accused the governor, Phil Murphy, of flexing his little tyrant muscles and said that the arresting officers boarded up our private place of business. To be fair, they have been being really careful, right?
Yep.
They screen members for symptoms. They require everyone to wear masks. There is social distancing taking place. But nonetheless, they are openly defying a governor's order.
Would you go to the gym?
No, but I'm paranoid right now.
Yeah, same. I'm very happy, as listeners of this show know, I'm very happy just hopping on my little Peloton and doing that and staying in my house and going for a run outside. I see no upside if you can exercise elsewhere.
I come into the office, I come into the city, I figure that's enough exposure for me.
Yes, you are doing your part, that's for sure. All right, you're listening to Bloomberg Business Week. Coming up, we're going to talk a little bit about something that's super important and right on what we've been talking about, which is testing. So we're going to talk about that in just a minute. Stay tuned. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with two headlines from the Bloomberg Professional Service. The International Monetary Fund has approved a $4.3 billion emergency funding program for South Africa. Also, California is reporting 29 new virus deaths. That is less than the 14-day average of 98. It is an update on Wall Street. Stocks are climbing, gold jumping to a record, stocks higher on speculation. The resurgence in global coronavirus cases will make the Federal Reserve reinforce its dovish message. S&P 500 index up now by just about 16 points, up 0.5%. The Dow's up 43, up 0.2%. NASDAQ up 131 points, up by 1.3%. 10 years down 3/30 seconds, yield now 0.59%. Gold up 2%, higher by $37 the ounce at $19.39. Again, a record on gold. We've got West Texas Intermediate crude up 0.8%, 41.61 a barrel. Recapping, S&P up 15, up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly, Scarlett Fu here with you on a Monday afternoon. It's a busy one. We are keeping an eye, obviously, on the virus, those cases continuing to rise across the country, and testing, Scarlett, certainly front of mind, and we need to understand how it works, where it works, when it works, and how it's all going to be executed. We've got the perfect person to talk about that. Neil DiCrescenzo. Did I say that right, Neil?
That's right, Jason. Thanks.
Close? All right, thank you. I appreciate it. You're the CEO of Change Healthcare, joining us on the phone from San Francisco. So tell us about testing here. Like, where are we? How should we be thinking about it, especially when it comes to a typical local community? How's it happening?
Well, Jason, I think you made a very important point, is that there really is maybe not a typical community. There's a lot of different types of communities in this country, and what people didn't really perhaps realize prior to the pandemic, that only about 55% of lab orders are actually submitted electronically today. And as you can imagine, that's particularly challenging in a rural or a poorer community. So what we really focus on with our network, where we move around about 15 billion healthcare transactions per year, one of the largest clinical financial administrative networks in the country, is really helping the doctors order these lab tests and making sure that people can get them in the most convenient and fast process possible, in order, of course, critically, as we've heard particularly recently, to get their results back. And so we've made access to our nationwide lab network free for all physicians, and we have over 1,400 labs and over 100 providing COVID testing on the network.
Neil, is there a difference between people going to their primary doctor or to an urgent care center or to the hospital to get COVID tests? Because I remember reading that ultimately they all get processed at the same couple of labs.
Well, I think, Scarlett, that's a great question, because what does that really come down to? It comes down to convenience and people's comfort level with either maybe their primary care physician or an urgent care center they're familiar with, or some other site, whether it's a Walgreens, a CVS, et cetera. Right now, we've got about 36 states that are testing less than the 35% recommended level with the CDC. So unless people go in to get tested, they're clearly not going to get the results, and we're not going to be able to impact not only the testing rates, but the positivity rates through treatment and contact tracing afterwards. That's been such a challenge in many states.
And so if people have a choice of where to go, where should they go?
Well, I think it really comes down to the individual. I think that the testing is getting, obviously, continued to have different sites, additional types of sites, and it's going to come down to, what people are able to do in terms of the convenience for them, what they're dealing with in their personal lives, but making sure that it's done in a way that the results are provided back to them as fast as possible, and utilizing the lab network that we and others have had in place, frankly, for decades. But it just wasn't really, of course, operating at this level and with this degree of focus. One of the things that's important for people to realize is one of the key priorities over the next few months is also going to be trying to figure out how to get at-home testing. So one of the things we focused on is connecting our network to these sort of fast-growing companies like You Do Test that provide home tests, but we're now seeing the industry leaders like Mayo Clinical Labs, LabCorp, Quest, the big lab companies, as they're often thought of, beginning to develop these tests. So you can imagine the paradigm shift we'll have if we're able to get at-home testing that's reliable, that will really facilitate people, particularly trying to get back to work or kids going to school.
Well, speaking of kids going back to school, for students who are going back to university campuses, Jason and I were talking earlier about how some schools will say that they will be testing students, fairly frequently, twice a week, for instance. What kind of problems or challenges do you foresee in being able to execute that, not just on one campus, but across the nation?
Yeah, it's really a lot of the challenges we've seen, Scarlett, throughout the pandemic, which is really one of infrastructure. I think all of these universities will point out that they weren't really set up or contemplating doing this ever in the past. And so, what we really look at is how can we take infrastructure we've had in place for the traditional settings and expand them to these sorts of settings, including universities. Down in Florida when the pandemic started, they have 67 counties with clinics that they wanted to obviously leverage as part of the testing. And just in a few days, we connected them with the commercial labs because we had most of the infrastructure in place to help with the challenges that they, continue to have, like many of these hotspot states in Florida. And I think, universities, very unusually, as you could imagine, are now having to contemplate how they do that as well prior to school starting.
And so, last question for you, Neil. What's the sort of technology solution that sort of sticks with us here now that all of this tech has been thrown? I mean, your background was having a big job over the health sector at Oracle. I do wonder how are our lives going to be different, even beyond COVID testing, when it comes to tech? Only got about a minute left here.
Well, there's going to be a lot more digital data, Jason, that's going to be used for a variety of purposes. So I'd say it's really three things: more data, more connectivity, and the interoperability around that data and connectivity to enable people to basically better maintain or improve their health, or in this case, deal with a crisis situation like the pandemic.
Right. A lot to learn. We're going to be dealing with this a lot, I have a feeling, especially in this race to a vaccine. We've got to get tested to get back to work, as you point out, and back to school. Neil DiCrescenzo is the CEO of Change Healthcare, joining us on the phone from San Francisco. This is all we talk about in many ways, Scarlett, especially when it comes to back to school. Right?
All day long, and it'll be heating up for sure. Have you taken a COVID-19 test, Jason?
I haven't. Have you?
No, I haven't either, and I haven't even figured out where I would go if I were to do that.
I know, which is part of the issue, right? I mean, we've got to figure this out if we're all going to be getting back to anything resembling normal life. I guess if you're an athlete, you know how to get tested. We'll talk about that.
Good deep tease.
A little bit later on. All right, you're listening to Bloomberg Business Week right here on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to talk some sports and the virus's effect specifically on baseball. But before we get to that, let's get to Charlie Pellet. Hey, Charlie.
Well, hello there, Jason Kelly. Got to begin with Moderna. Its shares higher now by 9.2% after getting a second round of U.S. funding for an experimental vaccine for COVID-19, also kicking off its late-stage trial. The Cambridge, Massachusetts-based biotech says the first participants in the 30,000-person study have been dosed. Moderna shares, they're pushing higher now by 9.21%. It is an update on Wall Street. The Dow, the S&P, and NASDAQ, they're all advancing this Monday, with the S&P up 19, up 0.6%. The Dow's up 70, up by 0.3. NASDAQ up 151, up 1.5%. 10-year down 4/32. The yield now 0.60%. Gold up 1.8%, 19.37 the ounce. And West Texas Intermediate crude up 0.9%, $41.65 a barrel on West Texas Intermediate crude. One of the biggest decisions for politicians, policymakers, educators, and parents has been the reopening of schools and high school sports. The clock is ticking, with football programs scheduled to get underway in a matter of days. Dr. Joshua Sharfstein is Vice Dean of the Bloomberg Johns Hopkins School of Public Health, and on Bloomberg Television this morning, he was asked if he would let schools open for football practice.
I'd be pretty reluctant to do that in areas where there's a high amount of spread, and I'd be especially reluctant to doing high school football, which really requires a tremendous amount of contact, obviously, and has been shown with all these colleges to be a place where virus gets transmitted.
And we'll have more on sports and the virus for you coming up in just a moment right here on Bloomberg Business Week. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Google employees will not be back in the office until next year. Alphabet's Google will let employees work from home until July 2021. Once again, pushing back the reopening of its offices as the coronavirus continues to rage in many parts of the United States. Google shares Alphabet up now by 1.2%. Gold surging 1.83%. We have got gold at a record $19.36, up $34 the ounce. West Texas Intermediate crude up 0.9%, $41.67 a barrel. Recapping, S&P up 19, up 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, let's get into the world of sports. John Stashower joins us, Bloomberg sports reporter, on the remote line from Connecticut. All right, so John, we saw some baseball over the weekend. We're going to see less baseball tonight. How in danger is the baseball season given these positive tests with the Miami Marlins?
Yeah, we don't really know. I think we have to wait for more test results. I think we're at 11 Miami Marlins players right now. There was, I think, a report of 12. Latest I heard was 11 plus a couple coaches. One player with first positive test, I guess, last Friday, and it spread through the team. And they are still in Philadelphia. The Marlins were supposed to come home last night or then this morning. They still haven't done it. They're waiting on these test results. I mean, if it stays right there at 11 Miami Marlins, you know, these teams have extra players at an alternate campsite. They can bring them up. But who knows? You know, they played the Braves last week in Atlanta, and the Braves were in New York. They played the Mets. Now the Mets are in Boston to play the Red Sox. So who knows how much this thing can spread around.
So, John, 11 out of a squad of how many? And therefore, does it mean that the Braves need to get tested as well, and the Phillies need to get tested too?
Yeah, I would think absolutely. And, you know, as we just talked about, there's 30. Normally, our team in past years had 25. They were going to expand it to 26 anyway. They're starting with 30 players, and then they have like another 30. Like, there's no minor leagues this year, but they have like a reserves of about 30 players. So, yeah, they can replace these 11 players with other players. But, yeah, we have to wait on the test results. Are there going to be more Marlins? Like you said, the Braves, the Phillies. The Phillies were supposed to host the Yankees tonight. That game's been postponed because the Yankees would have been going into the locker room that the Marlins had just used this past weekend. So they didn't want that to happen, obviously.
And obviously, there's a ton of money on the line. I mean, not to be too crass about it here, John. I mean, baseball basically sort of limped over the finish line to get these 60 games. They opted not to bubble themselves, as some of the other leagues have done. And a lot of folks have a lot to lose, players and owners alike, here if this season doesn't go on.
Oh, there's no question about it. And a lot of people are surprised we haven't heard yet from the commissioner, Rob Manfred. I assume we will at some point today. Maybe he's waiting on these test results. But it's a good point you make about the bubble, because the other sports are doing that. The hockey players have arrived in Canada. They're getting ready to have playoff games this weekend. The NBA players are in this bubble in Orlando. The latest test results from NBA players were no positive tests. So baseball talked about doing a bubble, changed their mind. Some people thought maybe they were smart because they were going to go to Florida and Arizona, two places you don't want to be right now. But no bubble, a lot of travel, and that's why the Canadian government didn't let the Blue Jays play in Toronto, because they didn't want players traveling in and out of the country.
And my understanding, John, as well, is that these Marlins players got tested before they played their game against the Phillies, right? And then they got the results after the game. So they went into that game, presumably 11 of them testing positive. And right now, in terms of context, the league is trying to play when the case number in the country is higher than when sports overall shut down in March. It's pretty stunning when you think about the broader picture.
Well, I mean, if you think back to when this all started, remember there was one NBA player who tested positive, and it was all like, oh my God, and now, they're playing with all kinds of players having the virus, testing positive. The report originally, as of this morning, it was that 4 Marlins had tested positive, and you could argue maybe they shouldn't have played a game yesterday. They actually won the game yesterday in Philadelphia, but then they got more test results, and now we're up to 11.
And I have to think Roger Goodell and others in the National Football League are watching this in a very, very worried way, John.
Oh, yeah, absolutely. Football is a big question mark. They can't have a bubble, I mean, there's just too large a roster, so many coaches and all that. So, it's such a contact sport. And some of the college players were having workouts, and we were hearing about, dozens of positive tests as a result of that. College football is a whole other story, with the kids who are not, they may not even have classes, or they really have football games. So I'm sure the NFL is going to try. You talked before about the money involved, so the NFL is going to give it a go, but I think there's a lot of questions about whether it'll work.
All right, John Stashauer, we're going to leave it there. Thank you so much. Great context and keeping us up to date on a story, Scarlett, that obviously all of us are watching. You and I are big sports fans, and it was great to see baseball back, but who knows, maybe short-lived, or maybe they will find a way through this. Hard to say.
Although I have to say, it is really odd when I hear John say this team was playing against this team at this park, because it doesn't feel like they're playing anywhere close to us. It's just happening virtually as far as I'm concerned.
I know. Could be happening on Mars. I think you said that earlier. It's a fascinating turn, and the contrast between the bubble and the not, I think, is something that will be discussed for a long time. All right, let's get down to Washington. Nancy Lyons, she's there with World and National Headlines. Hey, Nancy.
Hey, Jason. Republicans in the Senate are outlining their coronavirus relief proposal. It will continue supplemental unemployment insurance at a level of 70% of previous paychecks. Bloomberg's Irv Chapman has more from Washington.
Administration officials say most of the states can make the needed calculations. Isaac Boltanski of Compass Point Research said in a Bloomberg interview he's not so sure.
The 70% wage replacement threshold is an interesting construct, but we have so woefully underfunded our state unemployment agencies that I just don't see how you can do anything other than eventually agree on a flat fee as a supplementary payment for unemployment.
Boltanski said whatever additional spending is agreed to in the next weeks, Congress will have to add to it in the fall or in a lame duck session. In Washington, Irv Chapman, Bloomberg Radio.
Well, another person who works closely with President Trump has tested positive for the virus. Officials say National Security Advisor Robert O'Brien has mild symptoms and has been self-isolating and working from a secure location away from the White House. They say his infection poses no risk to the president or to Vice President Mike Pence. The tributes continue for the late Congressman John Lewis. Today, House Speaker Nancy Pelosi received his casket at the Capitol Rotunda.
It is an official, personal, and very sad honor to welcome our colleague, John Lewis, back to the Capitol to welcome his family and his many friends, to acknowledge his sacred life.
Lewis is the first black lawmaker to lie in state in the rotunda. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thanks so much. Scarlet Fu, DJ D-Sol. It just, I have to say, it just makes me happy to say the name. It gives me some sense of normalcy in all of this. DJ D-Sol, also known as David Solomon, the CEO of Goldman Sachs, spinning records out in the Hamptons. The world is maybe we're going to be okay.
Well, you know, he's feeling pretty good, right? Goldman Sachs had a very, very good second quarter. Their results were astronomical, especially in trading. And, of course, they also settled this problem with Malaysia over the 1MDB fund, the scandal there. So he's feeling pretty good, and he was on stage at this Hamptons event that was headlined by the Chainsmokers.
Yeah, it was a drive-in event, and of course, our Amanda Gordon has all the pictures. She was there, and I have to say, you have to check it out on the Bloomberg or on Bloomberg.com. The pictures are kind of bananas in a way, and it just gives you a sense of how these parties are being thrown right now. I mean, one of the things that Amanda points out, which I think is really important to remember, is the party scene is huge, not just for the attendees, but for the folks who staff these parties. I mean, this is a really important part of the local economy. So good on the organizers for putting this together in Watermill over the weekend. And, you know, you got to have DJ D-Sol. I mean, again, like I'm blown away by these pictures of like the plumes of smoke and everything going on. It's a cool sort of avocation he's got.
40 people worked on Saturday, so some of the folks who haven't had a chance to work so far this summer finally got a chance to get a paying gig here. In terms of how many people attended this event, there are about 350 people hired, but 500 people attending it, and they paid upwards of $25,000 for a spot to attend this event.
Exactly. And they, you know, if you paid the top tier, you got access to an air-conditioned RV and private bathroom. And don't worry, the crews were cleaning the portable toilets, the porta potties, every 10 minutes.
Yeah.
So partying is going on in the Hamptons, socially distant style, and DJ D-Sol is spinning records. So at least there's something.
Check out the pictures.
It's amazing. Amanda Gordon, she's the best. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Do want to begin with a headline from the Bloomberg Professional Service. Drug makers have nixed a White House meeting after an order from President Trump. This, according to Politico, developing story. We'll have more details as they become available. Right now, it is an up day on Wall Street. Stocks are rising on speculation. The resurgence in global coronavirus cases will make the Fed reinforce its dovish message. We will be hearing from the Federal Reserve on Wednesday. Gold jumping to a record. The dollar fell. S&P 500 rebounding from last week's drop as a rally in tech shares offsets a slide in banks. Here's where we stand. S&P 500 index up now by 18, a gain of 0.6%. The Dow up 52 points, up 0.2%, while NASDAQ up 140 points, up 1.4%. 10-year is down 5/30 seconds with a yield of 0.60%. Gold right now up $34 the ounce at $19.36, up 1.8%. And West Texas Intermediate crude up 0.9%, $41.68 a barrel on West Texas Intermediate crude. Recapping, equities higher, S&P up 18, up 0.6%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, let's dive into the magazine, if we can. Bloomberg Business Week. This is a story that's on Bloomberg Business Week. He joins us from Massachusetts. You know, I love talking about hedge funds and fees and money in Wall Street, Joel. So tee this up for us.
So the moment that Nishant, who's one of his co-authors on this, kind of spoke up about it, I was like, oh, please tell me more. And obviously, the 2 and 20 business model has been a mainstay of the hedge fund in this industry, but we're beginning to see that get trimmed, and it's not just a little trimming; it's a big trim. Hema, what did you guys discover as you dug into the numbers behind the story?
Yeah, so in our story, we were looking at the fee changes over, hedge fund fees have been falling for a number of years, but what we're seeing now is not only are they continuing to fall, but you're seeing a lot of creative things that hedge funds are offering, more concessions. Such things as one fund's offering to cover all investor losses. That's almost never heard of. One fund is doing away with performance fees until they hit a threshold. Some firms are lowering their fees in exchange for locking up capital for more time. And what this is reflective of is a decline in some of the assets that we're seeing as investors have been pulling away from hedge funds a little bit and demanding lower fees as performance has waned and just hasn't compared to the kind of returns we were seeing 20 years ago.
Okay, so when we talk about 2 and 20, it's 2% management fees and 20% is the cut of profits. A lot of people have said that 2 and 20 has been out of play for a long time. There have been modifications to that. But in your story, Hema, you also talk about this 1 or 30 fee model. What does that even mean?
Yeah, so 1 or 30, it's been championed by Alborn. And basically what it means is in a good year as a fund, you could charge 30% of the performance and no assets, no fees on the asset side. But in a bad year, you would charge just 1% of assets. And what that does is it equals out the fees that you can charge and makes it more attractive to potential investors. And this has become increasingly popular with a number of hedge funds, and it's becoming something that I think allocators are asking for too.
So, Hema, when you think about how long the hedge fund industry has gotten away with this, this has been really the normal for decades now, and obviously this has some profound impact, especially for investors. So, what are investors actually saying about this change in tactic? Because I mean, it seems almost like it could have happened a decade ago at this point. Is it all happening too late? And how sticky is this money ultimately going to be among institutional investors?
Well, investors, I think, are happy. They are able to negotiate and get better fees. The bigger the allocator is, the more influence they have, the better fees they can negotiate for themselves. Even the numbers that we've mentioned in our story, an allocator could, an investor could demand an even more preferential treatment for themselves if they have a big ticket investment that they're making. And the fees have been declining as hedge fund performance has been souring if we look at it as a whole. But I think investors over the past few years have been getting particularly frustrated. And as we're seeing this year, this environment has been harder for funds to trade in. The performance hasn't been so great. And if you look broadly across the space, there have been some outliers. But you're seeing just a much, much difficult fundraising environment, particularly for smaller managers. Some of the money has gone towards the bigger funds, as you know, once you get to being a $20 billion fund, it's a lot harder to lose that stature. But for smaller funds that are just kind of working their way up and trying to gain assets, it's an incredibly difficult time. Those are the ones that especially are having to rethink their fee model and their fee structure.
So, Hema, when you look at this story, this sort of really nice data-driven trend story against a lot of the breaking news, great scoops that you've had over the past couple years around big investors saying, you know what, big hedge fund investors saying, I'm just going to do the family office thing, or I'm going to shut it down a little bit. I mean, those have to be somehow synthesized, right?
Yes, and we've seen, especially over this year and last year, a number of firms pivot from being a big name hedge fund into a family office. If we look at John Paulson just this month, I believe. And so that does speak to the broader trend that we're seeing. Also, a lot of big names hedge funds like Paul Tudor Jones's firm and Alan Howard, they've had to cut fees in recent years. So you are seeing the old school guard, the big titans of the industry also facing this reckoning that we're seeing in the space, having to adjust, having to be more creative, particularly fundamental firms that haven't adapted to becoming more quantitative or included more unique trading methods. They've struggled if they have failed to do that. And that has also been part of the factors if we look at some of the firms that have closed down or only traded their own internal assets as well.
You know, the thing that reminds me of the bigger picture here is that hedge funds really never got their mojo back after the financial crisis. Central bank intervention increased all the correlation between the different assets. It reduced volatility. Yet we did have volatility in the first quarter of this year, and it was not a good first quarter for hedge funds. Why not? Why was the volatility not the right kind of volatility?
Right. So hedge funds focus on a specific kind of volatility, and sometimes if it's too short term and too unexpected, they find that a lot harder to trade, especially systematic funds that are computer driven. They need a little bit more time to catch up with the spikes in volatility. And so if it's over a short blip and then at random spurts, that's a lot harder to trade than a longer period of volatility over a couple months, which then you can make more opportunistic trades. If it's a sudden shock, as we've seen, that has been a lot harder. So that's why I think you've seen a lot of struggles in March, which most firms did terribly that month. And if you look at our chart in our story, we have a line graph that shows the S&P as it compares to a hedge fund performance. And since 2008, you'll see broadly that hedge funds have trailed the S&P increasingly with a broader spread compared to prior to 2008.
Yeah, sort of defeats the whole purpose of all those fees, if you ask me. All right, Hema Parmar, thank you so much. Great piece of reporting. Check it out on the Bloomberg and at Bloomberg.com. Not surprisingly, one of the most read. Hema, hedge fund reporter for Bloomberg, on the phone from New York City. Follow her at Parmar Hema for all of her scoops. Our thanks as well to Joel Weber, editor of Bloomberg Business Week. He joined us from Massachusetts. And for those of you listening in New York, D.C., San Francisco, watching on YouTube, Bloomberg Business Week continues right here. We're going to talk a little economics. Scarlett Fu and I are. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, that is coming up next. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading. The Dow, the S&P, NASDAQ, they're all advancing, but well off session highs. Stocks are gaining. On speculation, the Federal Reserve will reinforce its dovish message. And as tech shares rallied, gold jumping to a record. The dollar fell. S&P 500 erased last week's drop as the rebound in tech shares overshadowed a slide in banks. Here's where we stand again with just under an hour to go. S&P up 15, up 0.5%. The Dow up 29, higher by 0.1%. NASDAQ at 10,500, up 137 points. For NASDAQ, that is a gain of 1.3%. 10 years down 5/30 seconds with a yield of 0.60%. Gold up 1.8%, 19.35 the ounce on the precious metal. And West Texas Intermediate crude up 0.9%, 41.66 for a barrel of West Texas Intermediate crude. Moderna shares are rallying 9.2% after getting a second round of U.S. funding for an experimental vaccine for COVID-19. Also, it is kicking off its late-stage trial. Bloomberg Television and Radio spoke this morning with Moderna CEO Stéphane Bancel, who talked about the timeline.
It is possible that we could have data in October. That is not the base plan. That is the best plan. And then when this happens, I think based on the data, the FDA could decide to give us emergency approval, and that will make the vaccine available in the U.S. for people at our highest risk, the elderly, maybe healthcare workers, while the FDA reviews the file for approval for the general population.
And again, Moderna shares up now by about 9.2%. Under Armour says a pair of top executives, including the founder, Kevin Plank, have been named in a federal probe of the company's accounting, sending shares of the athletic maker lower. We've got the Dow, the S&P, and NASDAQ all pushing higher. S&P 500 index up now by just about 0.6%. S&P up 17. The Dow up 44, up 0.2%. NASDAQ up by 1.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Well, it feels like economic eyes are eyeing two main things, Scarlett. One is Capitol Hill and trying to understand what's going to happen next when it comes to relief and what may or may not come out of the Hill when it comes to unemployment insurance extensions and things like that. A lot of disagreement there, but also looking ahead to Jay Powell and what he and his friends are going to do at this monthly meeting. Yelena Shalecheva, she's going to break it all down for us. She's going to solve all our problems, answer all of our questions. Senior U.S. economist for Bloomberg Economics. She joins us on the phone. Yelena, what's the most important thing we need to be thinking of? Is it Jay Powell or is it what's going on the Hill?
Well, first of all, I wish you were right about she's going to solve all your issues, but unfortunately, that's not going to.
You're going to make us smarter. I can say that with complete confidence.
Sure. So we're looking forward to both things, and we're watching them very closely. So the first thing is obviously the announcement of a package coming from the Republicans, and that is expected this afternoon. So we expect the package will eventually exceed the $1 trillion that the Republicans are planning to introduce, simply because this is an election year, and like failing and falling short would be disastrous, first of all, but it is also would be disastrous for the economy if you really fail to do something at this point. So we know the unemployment benefits are expiring at the end of the month, that $600 add-on to unemployment benefits. And we expect that to be extended, but in a less generous amount, probably somewhere in the vicinity of $400 per week. Trying to tie it to the previous person's salary would just be not feasible to implement, I think. So they will have to go with something like blunt, do it as a blunt tool. So I think we will get an extension, but that will also fall short of the Democrats' $3.5 trillion package that was that they did pass back in May.
So it's interesting you say that they'll probably come up with $400 a week. Right now, those who are unemployed get $600 a week. That's the supplemental benefits. And we're reporting that, according to Charles Grassley, the Senate Finance Committee chairman, the latest proposal is to cut it back to 200. So maybe they'll meet in the middle there.
I think it would be a minimum. But they may come up somewhere in between. Because 200 will probably be not be enough given where things are right now. Mm-hmm. So companies experiencing bankruptcies. We see that a lot of businesses are still in trouble. So people will simply not be able to make it if they only get 200 in addition to regular benefits.
Talk to me about JPAL. Talk to us about JPAL. I know that this is something both Scarlett and I are going to be covering very closely. We've actually covered it together before. That was fun.
We'll do it again in the future, Jason.
We will. I promise.
It will be a lot of fun.
Yeah.
But probably no action, right? So we're not expecting any action from the Fed. But what will be interesting is to get any insight from policymakers on where they see and how they see they're going to change forward guidance. So that's going to be the most important thing they will probably be discussing at this meeting tomorrow and on Wednesday. I don't know if they will let us know what they decide on Wednesday in the statement, but I think they will have to put the basic structure around how they would like to tie forward guidance to economic outcomes, say the level of unemployment rate or the pace of inflation. They really need to make a decision soon. So there's a lot of uncertainty, and we heard from a lot of policymakers that a thick fog of uncertainty is surrounding the outlook right now, as Ladle Brainerd mentioned lately. But I think policymakers will just use this time just to deliberate about how they see policy going forward and introduce the change at the September meeting, along with the new projections for economic variables.
Okay, so any change might come in September. Would that change include yield curve control, which would basically be the Fed's attempt at keeping longer-term rates down? And I'm curious about why you would need to do that when the 10-year yield is pretty much stuck at around 60 basis points.
Exactly the right point. So I think that the yield curve control, or how they call it now, yield curve caps or targets, is a policy option that is finding little in the way of consensus support right now. I think they will save it for later if they need to, but I think they will go ahead with a more familiar policy tool, such as forward guidance. They did it back in 2012 when they said explicitly in the statement, we'll keep policy rates low until the unemployment rate goes down to at least 6.5%. That worked well. Also, calendar-based guidance worked well earlier in the crisis, or earlier in the wake of the Great Recession. I think they will go with a more familiar tool at this point.
All right, Yelena Shalecheva, thank you so much. Senior U.S. economist for Bloomberg Economics, joining us on the phone. She's going to have a busy week, to be sure, and we are going to be bringing you those headlines later on this afternoon when the GOP does present their latest plan, Scarlett. And I do think, and you know this far better than I, so many eyes on Jay Powell. Even if he doesn't make any move, the tone and every word is going to be picked over, right?
Oh, yeah. I mean, everyone's going to be parsing the language and also looking at how he responds, whether he pauses. And you can see it in just the way gold prices have been surging today. I mean, we all knew the Fed event was on the calendar, but this week, today, everyone started to realize or started to price in, you know what, they're going to be extra dovish, and they're going to stay extra dovish for a long time.
Yeah, by all accounts, I mean, this is really one of the big drivers of the market today. So as we get further down to the close, we'll continue to talk about that. You're listening to Bloomberg Business Week. Let's head down to Washington for some world national headlines. Hey, Nancy Lyons.
Thanks, Jason. Well, the Republicans and the Trump administration will be unveiling their latest virus relief proposal later this afternoon. Bloomberg's chief Washington correspondent Kevin Cirilli outlines what is expected in the Republican plan.
Unemployment benefits at 70% of the workers' wage. Democrats are saying immediately that's a non-starter. A new round of $1,200 direct payments and funneling money to schools for reopening, not just public schools, but also private and charter schools as well. Plus, funding for expanded virus testing.
Negotiations with Democrats have yet to begin with billions at stake. The House passed a $3 trillion relief package 2 months ago. Well, the first phase 3 clinical trial in the U.S. of a coronavirus vaccine is underway. 30,000 volunteers rolled up their sleeves today and were given a vaccine that was developed by Moderna and the National Institutes of Health. Dawn Baker is among the volunteers.
It is very exciting. I'm very anxious about it. I just hope that they're really, really good results. I know a lot of people are doing a lot of different vaccine trials and things are going on, but number one, I feel so proud.
The Moderna trial is being conducted at nearly 100 research sites across the country. The coffin of civil and voting rights icon John Lewis arrived at the U.S. Capitol this afternoon.
Ready, stop. Ready, stop.
That's the honor guard carrying the coffin up the Capitol steps. The late Congressman will lie in state until Wednesday morning on the Capitol steps. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business. We got to talk more about baseball, Scarlett. In part because I feel like this is such a moment for sports. This past weekend felt really great, I have to say. I had not watched very much live TV because really the only reason I watch live TV is for sports. Otherwise, it's like Netflix and in my case, Disney Plus, as you can see behind me, the Frozen stickers, which everybody who listens to this program knows about. But, I mean, baseball, it could be essentially over before it starts, not to be too dour about it.
No, 72 hours into the season, and they've already had to postpone 2 games. And we're saying it's postponed because that's what it is right now. But the owners are meeting today, and we might get more detail on what the plan is. Was there a plan B? I mean, I suppose there really wasn't the plan B. The plan A didn't even work, right? Because originally they were thinking about playing in a bubble and no one wanted that plan. So they moved ahead with actually playing in each city's parks. And that's kind of falling apart right now, too. If this doesn't work, can the NFL even begin its season? I mean, that's a high-contact sport.
I can't imagine. I mean, I really do think, and I mentioned this earlier in the show, like, I do think if you're a football coach, a football league, a football commissioner, professional or college, you're looking at this and just thinking, oh, shoot, like, this is not good at all. I also think that as parents, you and I think a lot about colleges and think a lot about high schools, and this is the sort of thing, too, that just makes you realize that the increased number of touch points that happens in any sort of situation, that increases the risk.
Yeah, how are schools going to reopen if this is what's happening in a small baseball team where they have all the resources to do all the testing? How do you do this in an elementary school? Right now, public schools can't control lice. How are they going to control coronavirus?
Yeah. No,
I don't get it.
Yeah, exactly. So we're going to be keeping an eye on this. Obviously, we all want to see sports, but we want to see them safely. And the NBA, it is set to tip off officially later this week, so all eyes will be on that. So far, so good there, but who's to say?
It's early days.
It is.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ are all advancing. In fact, NASDAQ is now at the best level of the day. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the green right now as the NASDAQ outperforms again. Dow's currently up 65 points. S&P's gained 20. NASDAQ climbs by 164 points. FANG stocks themselves are up 1.8%. The U.S. 10-year yield at 0.61%. WTI crude futures are a little changed. And gold jumped 33 to a record high. Transports rise 69 points. And leaders to the upside in the Dow Inc., Merck, and Apple, while Boeing and J.P. Morgan led to the downside. After earnings, Hasbro fell as much as 8.9%. Albertsons fell as much as 7%. And in other news, J&J launched their U.S.-based human trials for the coronavirus vaccine. LVMH expects inventory write-downs in the second half to be lower than the first half. And Garmin says they were a victim of a cyber attack, but no data was lost or stolen. Wrapping things up, F5 Networks reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. You're listening to Bloomberg Business Week. Jason Kelly and Scarlett Fu here with you on a Monday afternoon. And Scar, one of our favorite things to do every week, every Monday, if we can do it, and we usually do, is to check in with Andy Brown. He, of course, is editorial director for Bloomberg New Economy. I love his columns. He has kept us so smart and ahead of the curve, especially when it comes to China. And his column today is an especially good one because it provides some much-needed historical context about none other than Richard Nixon. Andy joins us on the phone from New York City. You're back in the city. Welcome back.
Yeah, I am. Thank you. It's great to be back, I must say.
Well, it's good to hear your voice, and you just seem a little closer. In any case, tell us about this column. This is a really interesting idea.
Yeah, so Richard Nixon, as we all know, he was the architect of rapprochement with China. He brought China out of Maoist isolation into the to join the international community of nations and the global economy, and set the stage for China's spectacular revival. And, you know, on his, just before he died in 1994, he was speaking to the late New York Times columnist William Safire. And he said, you know, maybe, and he was referring to China, maybe we created a Frankenstein. And that phrase was picked up by Mike Pompeo, you know, the Secretary of State, in his speech at the Nixon Library. And he essentially called China the Frankenstein, the monster that Nixon had imagined. You know, sending a unmistakable, powerful message that the goal of this group of hardliners that are now surrounding Donald Trump is to completely dismantle Nixon's primary foreign policy legacy, which was engagement with China. And, you know, their goal is very clear now. They want to they're branding China this totalitarian monster, and they want to build a coalition, a global coalition, to confront it.
Of course, China is in a very different place than where it was 45, 50 years ago. The nation is a world power player when it was barely on the global stage back in the early 70s. And the more hawkish Pompeo and others in the administration are, the more defensive China is, or you could argue aggressive China is as well. And you point out the level of nationalism in China in response to what the U.S. is pushing.
Yeah, so Pompeo called for a coalition of nations to confront China, and he also called on the people of China to stand up and resist their own government. And, you know, the fact is that, or the truth is that the more of this kind of language Chinese people hear, even those Chinese that are inclined to like America, that know America, that studied here, that worked here, are inclined actually to rally around their leadership. So this kind of extreme anti-China hysteria is having completely the opposite effect. It's stoking anti-American nationalism in China and creating enemies out of precisely those people that America should be reaching out to in China, people that are actually would like to see a more open, a more democratic China, and a China that plays more by international rules on trade and finance.
Yeah, well, if you're Chinese and you're hearing the U.S. talk about you, it's hard to like the U.S. right now when the president is saying Chinese flu and making all sorts of really racist comments, Jason.
Yeah, no, I mean, and one of the things, I totally understand that, and one of the things that Andy has been so good about providing is the Chinese perspective, at least from an academic and theoretical perspective. So, Andy, I mean, what is the view from that side, especially, as someone who lived there for a long time and having watched this all play out of late? How do they look at Nixon's legacy here?
Yeah, so China is not at all keen to decouple from the United States across the board. They have been decoupling in specific areas, for instance, including on the technology side, on the investment side. But they certainly don't want to see the relationship destroyed. I mean, it's too valuable for them right now. It does, on the other hand, seem that the strategy of Pompeo and his team is to sort of leave U.S.-China relations as this smoldering ruin, so that the next administration, if Joe Biden wins the election, will find it difficult, if not impossible, to rebuild it. I mean, that seems to be the goal right now.
Yeah, interesting. Andy Brown, editorial director for Bloomberg New Economy, joining us on the phone from New York City. And Scarlett, it's an interesting perspective, too, and one of the things that Andy says is that this isn't even ideological. This is about getting reelected, right?
Right.
I mean, which I think is really worth remembering to some extent.
It's election year politics, but what troubles me when I hear Mike Pompeo talk is how it's so black and white.
Yeah.
It doesn't feel like there's a lot of nuance. There's no gradations. It's just they're evil. We're good, and that's it.
Yeah, very binary. You're right. It's a very, very good point. All right, you are listening to Bloomberg Business Week. Much more ahead. We're going to bring you Dave Wilson's chart of the day. We're going to get you to the close of trading, as you heard Charlie Pellet say. Stocks trending upward, especially when it comes to tech stocks. That's going to be a big story this week. We know that. We're going to keep an eye on it and get you to the close of trading. You're listening to Bloomberg Business Week here on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Scarlett, well, coming up, a rite of passage, Dave Wilson's chart of the day, which you're very familiar with, but do you know how to play the game of guess the song that Dave Wilson
I'm just going to guess that he's going to play Bruce Springsteen no matter what. Because I know him.
Guess. It's a fair guess, and the boss does probably play a little bit more than with anyone else.
More than half the time?
Not quite, but close. And often there's like a Bruce connection. So we'll see what he has to say. In any case, before we get to Dave, let's get to Charlie Pelt. He's got an update on the trade.
Hi, thank you very much. We've got 28 minutes to go ahead of the closing bell. A market that's born to run right now on this Monday here with the S&P up 25, up 0.8%. The Dow up 116, up 0.4, and NASDAQ up 182, higher by 1.8%. The 10-year down 6/32 with a yield now of 0.61%. Gold up 1.8%, 19.35 the ounce, and West Texas Intermediate crude up 0.9%, 41.65 a barrel. Stocks higher on speculation. The Federal Reserve will reinforce its dovish message, and also technology shares are rallying. Gold jumping to a record. The dollar fell. As for shares of Moderna, they are soaring after getting a second round of U.S. funding for an experimental vaccine for COVID-19, also kicking off its late-stage trial. Moderna shares up now by 9.1%. 3:32 on Wall Street. Time now for the Small Business Report. Here's John Tucker.
It may be the middle of summer, but restaurant owners are contending with the pandemic. They are already thinking about winter. But today we're talking with Chris Wood, who operates Woody's Restaurant with 2 locations at the Jersey Shore in Seabright and Tinton Falls. Chris, you've been allowed outdoor seating, but still no clarity on when indoor dining can start. And although it's hot today, the summer weather, it's not going to last forever.
So we're hopeful that we will get indoor seating in Tinton Falls no later than September because, I feel like, we're in for a long, cold fall and winter. And if that occurs, there's going to be a lot of people in crisis.
With the Seabright location, it does seem to highlight the cooperation between the small business owners and the municipality because part of the parking lot has been turned over to you guys.
Absolutely. The town was very, very helpful, basically coming to us, and there was a lot of communication as to what we could do to keep the local businesses thriving during this pandemic. Seabright has been very fortunate. We do have some sidewalks. We do have some public space. And it seems like most of the restaurants in town, thankfully, are doing relatively well in comparison to some restaurants that are in more of a city-type setting.
How long can you hold out with reduced revenue, I guess is the question.
That's the million-dollar question. Our takeout revenue was actually pretty good in Seabright. And then once we added the outdoor seating, we've had some very, very good days. Now, that is this location. Now, Tinton Falls, again, is very, very different. We do have limited outdoor seating. We do have limited takeout facilities. So we greatly need that indoor seating in Tinton Falls. I can't imagine going through September, October, and November without indoor seating in Tinton Falls because if that's the case, it will not bode well for our bottom line, and it will not bode well for our employees.
All right, Chris, thanks a lot. Best of luck. Chris Wood operates Woody's Restaurant at Seabright in Tinton Falls, New Jersey. We're going to continue bringing you stories of small businesses trying to adapt and survive during the pandemic every day at this time right here on Bloomberg Radio. That's your Small Business Report.
And we thank you, John Tucker. Stocks, best level of the day with the S&P up 24, up by 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Very good song. I actually thought we had a little chat going on, take you behind the scenes, and Scarlett was guessing Gold Dust Woman by Fleetwood Mac, which I thought was a really, really good guess because Peter Green.
Yeah. Follow that thought.
you're on to something. Peter Green, of course, the guitarist, founder of Fleetwood Mac, or at least the co-founder, with Mick Fleetwood and John McVie, died over the weekend, age of 73.
All right.
And you're right. It's Fleetwood Mac.
It is Fleetwood Mac. Okay, good. But
that's
different
not how
song.
you know the song, is it?
No.
I mean, I Googled it. I had to cheat there.
Really?
Yeah. So that's why I'm not going to say anything right now. But
No,
I
just go
had
ahead
guessed
and say it.
beforehand that it would be Gold Dust Woman. It's Santana?
Santana
No?
covered Fleetwood Mac's Black Magic
Got it.
Woman.
Okay.
They had the hit with it, but Fleetwood Mac had the original version, and Peter Green wrote it.
Okay.
See, I was
All
kind of right.
You were kind of
You
right.
were not bad.
That
And
was
go with
really
Gold
good.
Dust Woman, if you were going to be thematic with today's chart, which I often am, that would be a pretty good choice, Scarlett. So I think you're on to something.
I have to say, and this is no shade to my normal co-host, the love of my professional life, Carol Masser, but Scarlett came hot out of the gate there, Dave. You have to admit.
Absolutely. But let's get to the
I shot
chart.
it out of the park with that one. Come on.
Let's get to the chart. It's all about gold and silver mining stocks, because we know that the metals have had quite the run, when you consider gold at a record, silver at a 7-year high, but what's gone on with the companies that dig up those metals, refine them or whatever, produce them, they have really taken off. And it's something that caught my eye the other day. You look at the NYSE Arca Gold Bugs Index, the ticker on the Bloomberg terminals, HUI. That's one of several gold stock indexes out there. But it's more than double from a low in March. As of Friday, the gain was 108%. And that's like more than 4 times as much as gold was up over that same period. Now, silver as a metal has done a whole lot better than gold, up 55%. From the middle of March through Friday. Then there's this index, the Solactive Global Silver Miners Index, up 117% in the same period. And you can't find an index in the S&P 500, no matter what level you look at, that has turned in anything like those kinds of performances, what we've seen in the gold and silver mining stocks. So people clearly are getting excited about the group. And you're seeing even bigger gains in the shares than you're seeing in the metals themselves. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
And I suspect we'll learn something about classic rock, too, from Mr. Wilson.
Oh, always. Always. Yeah, I just did. I mean, I did not know. I would have said that if you pressed me, I would have said that was a Santana song for sure. All right. Dave Wilson, well done. Scarlett Fu, very well done in your debut on the chart and song of the day. Much more to come. We're going to get you to the drive to the close and to the close. Let's get to Washington now and Nancy Lyons. Hey, Nancy.
Hey, Jason. The official release isn't for another hour, but people familiar with the latest Republican relief plan tell Bloomberg it proposes cutting supplemental unemployment benefits to $200 a week, down from $600. And that would stay in place until states could create a system that would provide 70% of a laid-off worker's previous pay. The plan, which was agreed to by the Trump administration, calls for a 2-month transition and then allows states to apply for a waiver of up to 2 additional months if they still can't implement the new calculation. Google says due to the pandemic, it plans to keep its employees home at least until next July. Bloomberg's Amy Morris has details.
Google will be the first major U.S. corporation with an extended timetable for working from home. The company plans to keep employees working from home until at least July 2021, affecting nearly all of the roughly 200,000 full-time and contract employees. They had expected to return to the office in January. Alphabet chief executive Sundar Pichai was reportedly swayed by sympathy for those employees who have families as they try to juggle work and school. In Washington, I'm Amy Morris, Bloomberg Radio.
The body of the late Congressman John Lewis is now in the U.S. Capitol Rotunda as lawmakers remember the long-time Georgia lawmaker and icon of the civil rights movement.
Sing grace,
Vice Vice President Mike Pence and Democratic presidential candidate Joe Biden are among those paying their respects this afternoon. President Trump says he will not be going. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Scarlet Fu here with you on a Monday afternoon. And Scar, I have to say, I never really anticipated maybe that you could borrow against some airport gates, you could borrow against some loyalty programs, but that's exactly what global airlines are doing because they need money.
They need money, they need it quickly, and this is one way of making sure they have access to that money when times are tough right now. Basically, American Airlines is putting up its intellectual property, including the American Airlines trademark, as well as AA.com, that website domain name, up for collateral in order to get loans. United Airlines selling almost $7 billion of debt backed by its frequent flyer program. And you mentioned gates at airports like at JFK and LaGuardia, pretty valuable stuff.
Yeah, I mean, it makes sense. I mean, listen, you and I have covered Wall Street for long enough to know you can basically collateralize anything and just go back to the financial crisis. We certainly learned that. But this is also coming at a time, you know, I know you're talking about it every day, and we certainly are as well on this program. The travel industry has just gotten crushed, and the airline industry specifically, it is a high-cost business, and there's just nobody flying. And I think especially when you look ahead and think business travel is, by some accounts, may never get back to the levels that it was in 2019. That's crazy.
At this point, it's hard to imagine the office building getting back to the levels before March. I mean, we're in the office right now, and it is empty. One thing that I wanted to point out is this reminds me of what Ford had to do back in 2006 when it pledged its iconic logo up as collateral. It didn't get it back until it received a second investment grade rating 6 years later. So this can eventually come back to the airlines once things get back to normal, once we all start flying again.
Yeah, it is amazing, though, the idea that you would put up. I mean, think about how much the website AA.com is probably worth to a lot of people out there. I mean, that is...
Or frequent flyer miles, for that matter.
Oh, my God, the frequent flyer miles.
I mean, that's the stuff in divorce agreements.
Totally. Exactly. You're listening to Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. The Dow, the S&P, and NASDAQ are all advancing. S&P close to session highs. Stocks are gaining on speculation. The Fed will reinforce its dovish message. Also, technology shares are rallying. Setbacks in the global fight against coronavirus will probably push Fed Chair Jay Powell to signal Wednesday that rates will stay near zero for longer. Here's where we stand. S&P 500 index up 24 points, again close to session highs, up 0.8%. The Dow is up 108, up 0.4%, while NASDAQ is surging 177 points, up 1.7%. The NASDAQ 100 index is up by 1.9%. 10-year the yield there, 0.61%. Gold up 1.8%, 1936 the ounce. We've got gold at a record. And West Texas Intermediate crude up 0.8%, 41.60 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
And it is time for the Drive to the Close on this Monday afternoon. Jason Kelly and Scarlett Fu here with you. And we're joined by Bert White, Chief Investment Officer of LPL Financial, on the phone from Charlotte. Bert, really nice to have you with us. First of all, what's going on down in Charlotte? I'm guessing it is probably about as hot as it is here in the New York City area. But how's everything going with virus cases and all that? How does it feel down there?
Well, it is hot. And the good news is that air conditioning is helping when you're staying at home. But no doubt about it, there is, an upward trend of nervousness around some of the cases that are coming through in this regional area. The South, in general, has been a little bit quick to reopen. Saw that quick reopening, and now we're beginning to start to see an increase in cases. And so being careful is really what's happening here down here in Charlotte.
Well, it sounds like you're doing well, and I'm glad to hear that that's the case. When you look at what's happening around you, and then you look at the stock market, is there a disconnect, or does it make sense to you?
Well, I've never seen the stock market and the economy be as disparate in their absolute results. I do think that's the real watch out for investors, though. I think investors want to look at things and determine whether or not it's good or it's bad. Like so far earnings is down 43% year over year. Is that good or is that bad? And so the reality is that's not the metric the market nor the economy sort of looks at. It's really, is it better or worse? And I think by and large, from the market view and the economic view, things are getting better, both. And so to some degree, the metric that matters most is actually in harmony between the market and the economy. It's just the absolute levels that are so disparate that's really got things pretty confusing.
And so, Bert, how big of a role does the Fed play here? The "Don't fight the Fed" mantra. The market, by all accounts, at least partially was up today, given a sentiment around what we may hear or may not hear, candidly, from Jay Powell and his colleagues on Wednesday. Where does the Fed fit into this equation?
I think the Fed, frankly, is the most important voice and the most important words. Right now, that's the backstop. Right now, that is the first relay runner. Oftentimes try to talk about these recoveries as being relay races. And what you need is you actually need to have a strong runner. They got to pass the baton to somebody else. And the Fed is always the first runner in these recoveries, always the first runner. And they've run hard, and they've run long. And what I think you're going to hear the Fed say, which they have been saying the last few meetings, is it's time for someone else to take this baton. And they've been trying to give this baton really to fiscal policy. And by and large, they've run pretty well. And we'll probably see some more running there. My guess is you will hear Powell and you will hear the Fed say that they are going to continue to be very dovish. They're going to continue to support this. I think they're going to hint to low rates for longer. I don't know what, we've been saying that the Fed is lower for longer. I don't know what longer than longer is, but whatever that is what they're lower for. And so I think you're going to hear more of that news.
Yeah, people have interpreted that to mean lower forever, or at least in our lifetime. I like the analogy of passing the baton to fiscal policy, and we've seen how fiscal policymakers are kind of stumbling getting out of the gate. They can't quite get there. We know the Republicans will be proposing something in the next hour or two. What does it mean in terms of how much it's going to affect day-to-day trading over the next couple of weeks? Because we're probably not going to get any kind of agreement today, tomorrow, but this will be something that's negotiated on. We're going to get lots of headlines that will conflict with each other, and it's, we're going to go through all the machinations before something eventually happens. Is the stock market going to be held hostage to that, or do people just look past that and assume something's going to come out of it? We'll just go ahead and price in the fact that it'll get resolved.
Well, I think the stock market's going to try to bully a bit of a response. I wouldn't be surprised if the market doesn't get some of the more positive gearing, forward-looking rhetoric on this. If it doesn't look good, if it doesn't look positive, it doesn't look like it's going to happen in the next week or two, I think you'll see the market throw a slight temper tantrum. Wouldn't be surprised if you see a couple of sharp down days as the market just sort of sends its message that this is really important. This is the next runner in this relay race. It's got to step up and do that. And right now, I think sometimes Washington needs to be shaken just a bit. They got to shake that sugar tree just a bit. And the market's not afraid to do that. You saw it do that in March. You saw it do it in April. You saw it do it some in May. It will do it if it needs to. I think you'll probably see that happen if the rhetoric that comes out of Washington isn't positive and forward-looking.
So, Bert, I think some of the research that you and your team have done, talk about this swoosh, this Nike swoosh-shaped recovery. Has that sort of been your consistent view, or how has that evolved over time, and what does the latest round of earnings tell you about that in terms of your confidence there?
Yeah, that's been our view really throughout this. The reality is we've felt more confident around the direction and the slope. That has been where we've been largely most confident. I think trying to get levels and timing is harder,
sure.
But I think direction and slope has been really where we've been most confident, and we're still seeing this Nike swoop type of move. The reality is, coming off bottoms and extremes, it is relatively common to get a very fast, sharp move. But I think here going forward, it's going to be a lot harder for those next gains, both in economic gains and others. And on top of that, you've got a fair amount of concern around the election, and then also the increase in some of the cases we've seen here after some of these early reopenings. And so all that mixed together, I think the next part of this recovery is going to be the harder part of this recovery, and therefore sort of lends itself to slower growth, but still an upward trajectory.
Okay, slower growth, but still an upward trajectory. Is that better or worse than what we can expect from Europe? Because there's been a lot more talk about how Europe might provide better opportunities right now, especially after all those countries managed to come together and unanimously agree on this 750 billion euro rescue package. The Republicans can't figure out what they want to do, but you had 27, 28 countries in Europe coming up with a solution.
In 30 seconds or less, Bert.
Well, I think in 30 seconds or less, the reality is that Europe's got some other issues. They've got deficits. They've got a ton of populism that's going to continue to drive that. And so we think that's going to continue to weigh on growth there. We think the United States and to some degree China are really the two places that you're going to see the quickest bounce back here economically.
All right, you nailed it. Great job. Thank you so much. Bert White, Chief Investment Officer for LPL Financial, joining us on the phone from Charlotte. Stay safe down there. Stay safe and cool. Same can be said for those of us here in the Northeast right now. Record temperatures sweeping through New York and Boston, as we heard earlier.
And for days to come, too, Jason.
I know. No, it's unrelenting. It's unrelenting in any case. All right, we're going to get you to the close of trading on this Green Monday. Jason Kelly, Scarlet Fu here with you on a Monday. This is Bloomberg Business Week.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Monday, July 27th. A move higher for the Dow, the S&P, and NASDAQ. Stocks climbed on speculation the Federal Reserve will reinforce its dovish message. And also, we had technology shares rallying. Gold jumped to a record. The dollar fell. S&P 500 erasing last week's drop as the rebound in tech shares overshadowed a slide in banks. A slew of earnings reports from NASDAQ 100 companies over the next few days will offer clues as to whether the gauge's record-breaking advance through mid-July has been justified. Here's where we ended the session. S&P up 23, a gain of 0.7%. The Dow up 116, up 0.4%. NASDAQ up 173. That was a gain of 1.7%. Should point out that S&P 500 index is back now in the positive column, year-to-date up by 0.3%. 10-year down 6/30 seconds with a yield of 0.61%. Gold surging 1.9%. Again, a record there. $19.38 the ounce. And crude higher by 0.8%. $41.60 a barrel on West Texas Intermediate crude. So an update on Wall Street. As for the overall mood of the market, Bert White is Chief Investment Officer at LPL Financial. He was our guest moments ago right here on Bloomberg Business Week.
Investors want to look at things and determine whether or not it's good or it's bad. You know, like so far earnings is down 43% year over year. Is that good or is that bad? And so the reality is that's not the metric the market nor the economy sort of looks at. It's really, is it better or worse? And I think by and large, from the market view and the economic view, things are getting better.
Moderna shares soared 9% after getting a second round of government funding for an experimental vaccine for COVID-19, also kicking off its late-stage trial. According to an announcement from the House Judiciary Committee, CEOs of Amazon, Facebook, Alphabet, and Apple will testify before a rescheduled congressional hearing on antitrust in big tech at noon on July 29th. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shake it, move thing, shake it, move thing, yeah, yeah.
What can I do? Shaken, not stirred.
Just move on up toward your destination.
I can make things move without touching them.
Shaking all over.
Bloomberg Business Week. Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's take a look at your movers and shakers, your winners and losers here on this Monday afternoon, this Monday trade. You heard Charlie give you the numbers there. The S&P, Scarlet Fu, more than, definitely more on the upside, 304 gainers, 197 decliners, 4 unchanged. So a more positive trade, and we saw that pretty consistently throughout the day. A couple notable names for you on the downside. One that I know caught your attention was Hasbro.
Yeah, Hasbro reported earnings before the open today, saying second quarter sales and profit fell. Obviously, it's struggling with the pandemic, which has shut toy stores and disrupted its supply chain. So it has not been a good day for Hasbro overall. And it goes in line with this idea that consumer-related companies are just at the mercy of whatever happens with the infection and with the economy kind of being held hostage right now.
Absolutely, yeah. And I mean, retailers are just getting crushed. We're going to talk a little bit about that later on the show when Rick Perkle comes along to tell us a little bit about the consumer space, longtime private equity investor there. That's in our 5 o'clock hour. I mean, the other area, and we talked about this earlier in the context of the airlines, the cruise companies, and notably Hasbro was your worst performer. Number 2, number 3, 2 cruise companies, Carnival and Norwegian Cruise Line, both down 7 and really both 7% respectively. And as I'm sure you've seen, Scarlett, I mean, occasionally you'll get a little bit of good news and they'll spike for a day, maybe 2. But generally speaking, I mean, Carnival is down 73% this year.
There's so much retail interest in these companies. Yeah. I guess the thinking is they'll have to come back at some point. They will make a comeback. People will eventually go back to cruising. But, I mean, if we can't even have baseball games right now because some players tested positive, at what point can you make cruises safe once again? And I think they pushed back the date to open cruises up to late September.
Yes.
I mean, a lot has to happen until before then.
Right.
And then we get into flu season.
Exactly. Yeah, and that was one of these things that we thought maybe, and all the time blends together. But I feel like a month or so ago there was this sense of like, all right, maybe boats are going to be back on the water in August, and that seemed a little aggressive. But who's to say? We also thought we were going to be back seeing movies by this time. It just didn't happen.
Yeah.
And so you've seen those names continue to decline. One name that actually surprised me a little bit in terms of where it ended up was Under Armour. Did you see that stock actually ended higher for the day after its founder and former CEO and its former CFO were served with a Wells notice? That basically means they are under investigation around some accounting practices. That stock was down as much as 1.8%. It rose as much as 2.8% and finished pretty close to that level, up 2.7%. Now, it's still an $11 stock in many ways, but it feels like the read here, Scarlett, is that maybe this will essentially, from an operational perspective at least, sort of divorce Kevin Plank from the operations of this company. They do have a new CEO, Patrick Frisk. He is engineering a turnaround, so maybe this gives him a little bit more space to play.
Yeah, and he can call the shots because Kevin Plank had been clear in telling Bloomberg that he would remain heavily involved in the business, even with the appointment of Patrick as the CEO. So this is a really interesting play here because you're essentially betting that the founder leaving is a good thing for the company going forward.
Kind of amazing how the market digested that throughout the day, because I think when we were doing our planning call earlier, we were like, man, this stock is going to get crushed today, and it opened up lower and then found its way back. All right, let's take a quick look at volatility. The VIX volatility down a touch, maybe not surprisingly given the action that we were just describing, finishing down 4.2% or so at 24.76. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson, your stock of the day, is it pronounced Fulgent Genetics?
You got it. Fulgent Genetics. It's a provider of genetic tests for cancer and other diseases. The company was founded in 2011 and went public in 2016. The ticker is FLGT. Fulgent Genetics went public at $9 a share. It's traded at less than its initial price for much of its history. This year, the shares dropped as low as $6.70 when U.S. stocks tumbled in March. Since then, Fulgent Genetics has more than tripled as the company has expanded into COVID-19 testing. U.S. regulators approved emergency use of one test in May and another one in June. Now, Fulgent Genetics' new line of tests led Piper Sandler to turn more optimistic about its prospects. The firm raised its 12-month share price estimate by 48% to $31. That's the highest in a Bloomberg survey. Piper now expects to see a profit this year after predicting a loss earlier, and raised sales estimates through next year by about 58%. All this sent Fulgent Genetics shares to a record. They closed with a gain of more than 35.5%. That was the biggest for the stock since November.
All right. Interesting one. I liked how you said, we were discussing this on our chat going into this, and you said to Scarlett, Dave, you've never heard of it. And I think that's fair. Neither of us had ever heard of this name, right, Scar?
No, I had not heard of it. FLGT is the ticker here. You mentioned that people expected to make a profit. Is this a company that's reported profits in the past, or has it lost money all along? Like so many of these small tech-related, healthcare-related companies.
Yeah, you look historically, they've been profitable off and on the last couple of quarters, at least on an adjusted basis, but they do have a history of losses, which is consistent with what you see in a lot of cases here.
139 employees based in Temple City, California, Jason.
There you go.
Just outside of L.A.
There you go. Dave
and the
Wilson.
Stock has now more than doubled this year.
You find those hidden gems for us. We really appreciate it. All right, Dave Wilson, have a great evening. We will catch up with you tomorrow. here on Bloomberg Business Week. In the meantime, let's get out to San Francisco, north of where Dave was just talking about. Ed Baxter is there with World National Headlines. Hey, Ed.
Yeah, hi, Jason. Hi, Scarlett. Republicans are proposing a cut in supplemental unemployment benefits to $200 weekly from $600 until states are able to create a system that would provide 70% of the worker's previous pay. The party says it does not want to be beneficial for a worker to not work. In the U.S., the increase in number of infections have slowed, at least in Florida and Arizona. California Governor Gavin Newsom here, in finishing up his briefing, says the number of deaths has gone back up.
But 29 is today's reported number, but the 7-day average masks 109 average deaths per day. And I remind you, what more evidence do you need than that of how deadly this disease continues to be?
And he says strike teams are being sent to the Central Valley in Los Angeles County, where spread is still very bad. In New York City, Bill de Blasio, the mayor, says school reopenings seem to be on plan at this point.
Our intention is to open on schedule and to open with all grade levels, but again, with blended learning. Some part of the week kids in school, some part of the week kids online.
U.S. National Security Advisor Robert O'Brien, meanwhile, has tested positive. Congressman and longtime civil rights leader John Lewis lies in repose at the Capitol today, praised by both sides of the political spectrum. Senate Majority Leader Mitch McConnell.
We pray and trust that this peacemaker himself now rests in peace.
But not the president.
No, I won't be going. No.
Hong Kong will ban all dine-in services at restaurants starting now. In San Francisco, I'm Ed Baxter. This is Bloomberg Radio.
All right, Ed, thank you so much. You're listening to Bloomberg Business Week. Jason Kelly, Scarlett Fu here with you. Your most read story, Scar, over the last hour is a really interesting one. It's reported out of Japan, interestingly enough, and it's notable because Japan actually ranks last among developed markets by the OECD for work-life balance. They love the office, apparently.
Home of the
workers
salaryman
in Japan. Yeah, exactly. But even trading floor diehards, that's what the headline says, are now embracing work from home. This does feel notable because they've got some, again, anecdotal evidence that basically says people, they started working from home, never thought they'd do it, and now they're at least saying, yeah, maybe a day or two a week. I could do it.
Maybe a day or two a week. The rest of the time, make sure you continue on your 90-minute commute back into the office. And, of course,
those
social
bullet
distancing.
trains or,
Yes.
in the subway, like crammed next to each other.
Yes.
But it is interesting to think about how much this has changed. And I don't know what you hear from your sources on Wall Street. I get a very mixed picture when I talk to my buddies who are traders or bankers, especially traders.
Yeah, some people love it. They just love how productive they can be. They love that they don't have to engage in the random small talk at the office and just get through and be able to talk to people when they need to and plan their life in a way where they can go take care of something and then come back and be on a call at 7 p.m. Others, I think especially people who are new to the industry, really feel like they're missing out on something by not being in the office. You're missing out on the culture. You're missing out on the mentorship. You're missing out on that high that you get when you talk with other people and work with other people to get somewhere.
Yeah, and I think it's going to, we don't know exactly how it's going to play out, and so much of it, and you and I keep coming back to this, but I think rightly, is kids in schools. You know, how is that going to play out? That's going to affect moms and dads in terms of how and when they can work and where in the city. I mean, I think we think about it all the time here. You and I both live in the New York City suburbs, and it's constant chatter.
I know. You can't make a decision on whether people can go back to the office until you make a decision on whether schools can reopen.
Absolutely. That is the truth. You're listening to Bloomberg Business Week.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A Monday move higher for the Dow, the S&P, and NASDAQ. S&P and NASDAQ closing close to session highs. Stocks advance led by technology on speculation the Fed will reinforce its dovish message. Also, gold jumping to a record. The dollar fell. S&P 500 index did climb today, up by 23 points, up 0.7%. The Dow up 114, up 0.4, while NASDAQ surged 173 to 10,536 for NASDAQ. That is a gain of 1.7%. 10-year down 630 seconds, yield 0.60%. Gold up 1.9%, 1938 the ounce. And West Texas Intermediate crude up 0.8%, 41.62 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly and Scarlett Fu here with you, and this was a story. It caught our attention big time. We were just talking about traders a few minutes ago. Let's talk about Google. Garrett DeVink is with us, Bloomberg technology reporter. He joins us from New York City. Working from home, Google is saying that's fine until next summer. As Carol Massar would say, whoa. Garrett, tell us what's going on.
Yeah, well, I think what probably happened here, I mean, you can see in the memo that CEO Sundar Pichai sent to employees that he framed this as giving employees flexibility to plan their lives. And so, you know, knowing Googlers, I think what happened is a lot of Googlers were probably saying, look, we need to figure out what we're going to do with our kids this year. And if we're maybe planning to move to a different state, maybe going to their country homes and setting up homeschooling or that kind of thing, they don't want to have to get recalled to the Bay Area halfway through the year and have to kind of go through that disruption. And so that is probably what happened here, but it does put Google in the position of kind of being far and ahead, the major company that is sort of has the longest time frame. And I'm sure you will see at least the other major tech companies that most of their employees can work from home and that can afford this kind of thing, probably following their lead at some point in the next days or weeks.
It's so forward-looking. And I bring this up because the government, various state governments, local city governments, still have not said anything about whether schools will reopen or can reopen. And the fact that it goes on until July 2021 means it covers the entire school year for the possibility that schools will reopen, some kind of hybrid learning, and then have to shut down once again. I think there are 123,000 Google employees, and of course there are also contractors as well. What does this mean for Google's home campus and I would guess the California housing market? Because a lot of people have already left town and moved to, like you said, their home country or cheaper places to live. I mean, this might just be the beginning of a permanent exodus.
Yeah, I think that's really interesting. I mean, I think there's sort of this question obviously has been asked about what this means for the future of work in general, if these kind of economy-leading companies that really pride themselves on being innovative are kind of making decisions and maybe other companies will follow their lead, that kind of thing. I think, I personally have been pretty skeptical that, this is the end of the office building as we know it. But when you see companies like Google saying, another 12 months of essentially being able to, employees being able to do whatever they want, it definitely starts to think, well, if I'm a smaller company and, dealing with a tough economic environment, I might just say, well, we're getting rid of the office to save money. And if Google can do it, so can we. And so I definitely think a lot of people look to Google. They were one of the first companies way back in the beginning of March to send employees home, even before San Francisco had been hit by the coronavirus. And so I think they're the kind of company that, A, can kind of afford most of their workers, their corporate workers can work from home. They do the kind of work that is generally doable from home, so it's not a major cost for them. Obviously, Amazon can't send its warehouse workers home. But also they're a company that really does analyze the future, and they have a lot of smart people working there. So I think they saw what was going on in the U.S. with the response from the federal government and a lot of state governments and said, look, this country's not going to be able to get its act together, so let's just stay home for another year.
Well, it's interesting, too, just to think about the timing of this decision. And, we heard just a little bit ago from Ed Baxter what California Governor Gavin Newsom was saying about the latest figures. And obviously, while it's affected Southern California more than Northern California, California has really found itself right back in the middle of all of this. Well, Garrett, we would be remiss, given the week that it is, if we didn't ask you a little bit about earnings coming up. Give us a bit of a preview. What are we expecting when Alphabet comes and gives their update?
Yeah, it's going to be interesting because, I mean, we've had one kind of coronavirus earnings so far, but it was, not the entire quarter that was reported earlier this year. Obviously, it was kind of half before and half, after the virus hit. And so Google took a big hit. A lot of advertisers pulled their spending right away because of the uncertainty. But around the time of the earnings, Google was being cautious, but a lot of investors and analysts are saying, oh, the worst is over. Let's pile back in. It's going to be a V-shaped recovery. And looking at how the virus continues to kind of grow and move throughout the economy, as well as as well as Congress sort of not sure about exactly what the release of stimulus bill is going to be. I think it's likely that maybe results are not going to be as good as a lot of those investors and analysts were hoping last time we saw numbers from Google. So, yeah, that's in a couple days here, and we will see where they're going.
One thing that Alphabet probably will do, Jason, is continue to buy back shares. These big tech companies have a lot of cash on hand. That's not the problem. And in fact, they're prized for their cash holdings, and they are not afraid to deploy it as needed. Of course, buying back your shares has the added benefit of boosting your earnings per share because it reduces the number of shares outstanding.
Right. Yeah, absolutely. And they're going to get some questions about that. Also, a lot of questions about tech. Garrett, before we let you go, coming from Capitol Hill, 30 seconds here. What do you hear from your Silicon Valley and your New York tech folks about what we may hear this week as some of these guys trudge down and over to Washington?
Well, the hope is that it's going to be really smart, focused questions from members of Congress about antitrust. But some of the noise coming from some of the Republican members of that committee suggests that they want to ask about bias and misinformation, which in the past has really derailed a lot of these hearings and led to these CEOs essentially getting away without having to really say anything. So I'm kind of crossing my fingers that the politicians can stay focused and maybe get us some, interesting new information out of these executives.
Well, Garrett, that's adorable that you think that members of Congress are going to stay focused. But, we'll see. We'll see what happens. Garrett,
always hopeful.
Always hopeful. Thank you so much. Good reporting on this. Great context on what's happening with Google, both from a work from home and earnings perspective, and even a little DC thrown in there. All right. For those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on 99.1 in DC, sound on. That's coming up next. We're going to get an update from DC as well right here on Business Week.
Bloomberg World Headquarters. I'm Charlie Pelletier. It was an update on Wall Street with the Dow, the S&P, and NASDAQ all advancing today. Here's where we finished the Monday session. S&P 500 index did advance today, rising by just about 24 points today in terms of the percent. That was a gain of 0.7%. The Dow up 114, up 0.4%. NASDAQ up 173, a gain of 1.7%. 10-year down 7/30 seconds with a yield of 0.61%. Gold surged $38 the ounce, trading at a record up at $19.40, rallying today by 2%. Crude also higher. West Texas Intermediate up today by 0.9%, 41.65 for a barrel of West Texas Intermediate crude. Also saw a surge in Bitcoin today, rallying by 12.4%. So an update for the U.S. stock market. Lots going on. We've got the Fed decision coming up on Wednesday. Wall Street, though, also keeping an eye on those rising tensions between Washington and Beijing, and potentially what it could mean for trade down the road. Henrietta Trey's is Director of Economic Policy at Veda Partners.
The real question for anybody really watching the U.S.-China trade war is to see what the president is doing on economic policy. Is he imposing secondary sanctions on PRC banks? No. Is he putting aggressive sanctions on more than just a couple of Chinese officials? No. Is the prospect of tariff increases rising? No.
And a no for Google employees wanting to return to the office anytime soon. They're not going back until next year. Alphabet's Google will let employees work from home until July 2021, once again pushing back the reopening of its offices as the coronavirus continues to rage in many parts of the United States. Today, we did see Google shares advancing along with the rest of the market. Again, recapping here, S&P 500 index up 23 points. That was a gain of about 0.7%. Google, by the way, up by 1.2%. I'm Charlie Pellett. That's a Bloomberg Business Flash.
All right, Charlie, thanks so much. You're listening to Bloomberg Business Week. Let's head to Washington now, where the story is unfolding about what the Congress is going to take up when it comes to the next round of stimulus rescue, when it sort of picking up what their part of the equation is. Jordan Fabian joins us, Bloomberg News' White House correspondent. He is at the White House. So, Jordan, I know Senator McConnell, Majority Leader McConnell, is speaking now, or has been speaking on the floor. You guys have done some great reporting, figuring out what the GOP is going to put forth. Help us understand what's on the table here.
Well, what the Senate Majority Leader is laying out is a sweeping package that he says will try to revive the economy, which some Trump administration is thinking of Larry Kudlow this morning, or even expressing some doubt that the supposed V-shaped recovery is going to hold, given the problems that the virus has posed to the economy. So they're looking at a sweeping piece of legislation. I know there's been some talk about a sort of a piecemeal approach, but they want a big bill that would focus on three priorities: getting kids back to school, workers back to work, and surge the healthcare fight against the virus.
And we are expecting the bill momentarily, from what I understand. Chuck Schumer, of course, speaking right now on the Senate floor. Talk to us a little bit about the main issue of contention, because we know that there's a $600 supplement unemployment insurance that people currently get per week. And the Republicans, I believe, want to cut that to a third of it.
That's right. Senate Republicans are proposing a cut to a $200 additional weekly benefit for those out of work. And this is on top. This would be a cut from that supplemental unemployment insurance that the federal government handed out, in addition to what states are giving out, and that's at odds with what the Democrats want. The House Democrats passed their own legislation for stimulus back in May that would essentially extend that $600 benefit until the end of the year. But with the two parties at odds, it's unclear that that benefit is going to be fully extended for the rest of the year at its current level.
Well, the timing is sort of a big deal here, Jordan, right? I mean, there's a lot of pressure to get this done. What is the likelihood that this could get done this week? I mean, is that essentially nil at this point? The Senate Majority Leader was saying over the weekend that his timeline is measured in weeks.
Yeah, lawmakers have been increasingly pessimistic about a deal getting reached this week. You had leaders on both sides of the aisle last week saying these talks could lead into August. But the problem with that is that extended unemployment benefit expires on Friday. So you will have millions of Americans who've been out of a job losing that additional income they've been getting from the federal government after they lost their job due to the pandemic. And on top of that, too, you still have millions of Americans who haven't even received that $600 plus up that they were promised in the federal government due to backlogs and bureaucratic problems at the state level.
Yeah, a lot of technology issues for the different state unemployment offices. You mentioned this Friday. That's certainly going to be the deadline people are looking at. Next week, on Monday, will be August 3rd. Doesn't Congress go on recess right around then?
The plan is for both those chambers to go on recess for August, but leaders have talked about, they haven't pledged, but they've spoken about extending that, or pushing back that recess if a deal on the stimulus hasn't been reached by the time it comes up.
And is it fair to say, I mean, you're joining us from the White House, Jordan, I mean, fair to say that Mark Meadows is sort of the president's point man on all of this, you know, given some of his relationships on Capitol Hill and now as the president's chief of staff?
Yeah, Mark Meadows is playing a big role in the talks here, but so is the Treasury Secretary, Stephen Mnuchin, who's been tapped by the president to negotiate these kind of bipartisan deals in the past. In fact, you have both Meadows and Mnuchin going up to Capitol Hill again this evening to meet with House Speaker Nancy Pelosi to try to advance these talks.
Exactly, and I'm just reading that headline that you and your team just broke, and I believe Senate Minority Leader Chuck Schumer is going to be a part of that as well. He just finished speaking, or has been speaking, on the floor as well. And the president, he's in North Carolina right now. I would imagine we will probably hear from him via tweet or somehow on this today, right, Jordan?
Yeah, I think it's fair to say that the president is going to weigh in. But the problem here has been that the White House and Senate Republicans have sort of been arguing amongst themselves about what should be in this package. And so, as you point out, the talks are just beginning now with the Democrats. And some members have complained that they've known that they've needed to re-up the stimulus for weeks and even months, but they've waited until this deadline has come up. And the fact that they're only beginning talks with Democrats now, and we're only seeing the draft bill from the Republican side at this juncture means that we're going to see quite a bit of a delay before that bill becomes law, if it becomes law.
All right. Jordan, Fabian, we're going to leave it there. Thank you so much. Bloomberg News White House correspondent on the phone from the White House, Scarlett.
You know, I wonder, even if they were somehow, miracle of miracles, able to come to some kind of agreement now in the next 5 minutes, still, how long would it take for them to pass the bill?
Right. No, I totally agree with you.
Can they get it done by Friday when people's unemployment benefits run out? Yeah,
and Jordan makes a really good point. I mean, everybody's known this deadline. I mean, this isn't a surprise. And in many cases, this has been put off and put off and put off. And as he rightly points out, some disagreement in the GOP caucus and disagreement between GOP members on the Hill and the White House. So we'll see what happens. A big meeting tonight, it sounds like. Speaking of Washington, we're not going to go to Washington. We're going to go to San Francisco. That's where Ed Baxter is. He's got world national headlines. I tried to move you to the East Coast, Ed. Sorry.
Lots of people have with no avail. That's okay. I'm going to Washington because you guys have been doing a great job of covering what's going on now in the Senate. Majority Leader Mitch McConnell has just made the opening pitch on the next stimulus bill just in the past few minutes as you guys are reporting. This is Bloomberg's Dan Flatley who is watching.
We accomplish nothing if
that's not Dan.
Have to.
I'm sorry, that's not Dan. This is Dan.
Cutting supplemental unemployment insurance benefits from $600 to $200 a week. There's talk of another round of direct payments of $1,200 to consumers, and then $100 billion to schools and universities. He's sort of framing this as kids, jobs, and health care.
So now senators will be speaking for the next couple of hours. And this is, as you guys say, basically the opening salvo on this. How long it's going to take, nobody's even guessing at this point. New York State cases remain stable, although Governor Andrew Cuomo says there's still some businesses and people acting irresponsibly, says he will not be afraid to move on them. Now it's your turn, Mr. Governor.
We accomplish nothing if we have to roll back some rules and regulations on bars and restaurants.
And 2 New Jersey men have been arrested today after police found their New Jersey gym opening. They'd been challenging the shutdown orders, both charged with 4th-degree contempt, obstruction, violation of a Disaster Control Act. They could spend 6 months in jail. Global news 24 hours a day in San Francisco. I'm Ed Baxter. This is Bloomberg Radio.
All right, Ed in San Francisco, thank you so much. Well, back here in New York, Goldman Sachs, I guess while DJ Diesel, otherwise known as the CEO of Goldman Sachs, David Solomon, was out spinning records, there's been some work going on that he's probably very aware of about a new performance review system that's going to grade up to 10% of Goldman employees as underperformers, and you wonder, Scarlet Fu, if this is kind of a setup to maybe cut some folks.
Laying the groundwork, you mean? Creating a paper trail?
Exactly.
It may very well be. I mean, this is like grading on a curve, but in a way that's not beneficial to employees who might not be meeting the metrics that have been laid out for them. And we know that the banks have been really resistant to the idea of doing anything in terms of streamlining their staff count right now during COVID, but you know, Wells Fargo obviously has to make some changes, and once Wells starts doing it, it becomes a little bit more, I don't want to say acceptable, but it opens the door.
Sort of socializes a little bit, right?
Yes, yes. It just becomes, you know, a little bit more like this can now move on because we have to start thinking about how the future looks. So yeah, 10% of the staff will be rated underperform, and that's in contrast to before, because I think typically Goldman cuts about 5% of staff. So does that mean that those 10% will definitely be cut? I don't know.
Yeah. You know, they're going for more transparency, according to a spokeswoman. And we should point out this was reported first by Reuters. And, you know, as you rightly point out, Scarlett, this is also coming at a time where 90% of employees are working from home. That is part of the complication here for sure. And who's coming back and when they're coming back and what their jobs are, that's all going to factor in. This is going to be messy. It's going to be messy across Wall Street. It's going to be messy across corporate America in many ways.
And I'm glad you bring that up because according to this report, employees will have more frequent formal performance check-ins with their managers, at least 3 times a year starting next year. So you'll be having a lot more virtual meetings before you get rated.
A lot of Zoom ratings. Anyway, we'll bring it to you. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A move higher this Monday for the Dow, the S&P, and NASDAQ. Gold trading at a record. S&P up 23, higher by 0.7%. The Dow up 114, up 0.4. NASDAQ rallied 173, up 1.7%. 10-year down 7/30 seconds with a yield of 0.61%. Gold up 2.1%, now at $19.41.91 the ounce. West Texas Intermediate crude up 0.8%, 41.62 a barrel on West Texas Intermediate crude. Stocks climb, led by tech shares on speculation the Fed will reinforce its dovish message. Wells Fargo, meanwhile, planning to join the $4.5 trillion ETF industry, one of the last major asset managers to enter the fray. Recapping equities higher, S&P 500 index advanced today by 23 points, up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, I know that Scarlett and I have both been looking forward to this conversation because we have a lot of questions for Huub Savelkoos. He is the Chief Sustainability Officer for Philip Morris International. He joins us on the phone from Switzerland. Huub, it's really nice to talk with you. Thank you for spending some of your evening with us. We know it's a little later there in Switzerland than it is here in New York. How are things there? What is it like amid this global pandemic?
Things are good here, but I'm still working from home. But we are of course very careful not to have a second wave in Switzerland. But we are we are very careful not to get a second wave, I think.
Right. Yeah, certainly that is on everybody's mind. All right, so let's start with the obvious question. You're the Chief Sustainability Officer for Philip Morris International, well known as a company that has been very involved, to say the least, in the tobacco industry. Help us just square that circle that square. What is the sustainability effort? What does it look like at a company like PMI?
Yeah, I think our approach is rather unique because we have put the product at the core of our sustainability strategy. I think most companies, when they focus on ESG, focus mainly on how a company operates and less on what a company makes. But when you're a tobacco company, I mean, the product and the impact on health of your product is really your number one externality. That means if you don't focus on that as the core of your strategy, you cannot really credibly talk about sustainability, I think. And that's why, as a company, we're focused fully on replacing cigarettes with better alternatives. And we think this will enable many countries to phase out cigarettes within 10 to 15 years. And that's really what we think we can have the biggest positive impact on society.
Is the goal to get rid of cigarettes completely?
Yes, that's exactly the objective. And we have declared that in 2016 because we think a lot of measures have been taken over the last 20, 30 years by health organizations to prevent initiation by kids and to encourage cessation. And those measures have to continue, of course, but more than 1 billion people still smoke cigarettes today all over the world. And that number is more or less...
Okay, ladies and gentlemen, time's up for today. I will see you all tomorrow from 8 o'clock, as always, UK time. So have a great evening, stay safe because of coronavirus, all this stuff. And I'll speak to you all tomorrow. Be safe.
Replace cigarettes and make them free.
Well, and part of this, Huub, is also to think about your supply chain as well. Tell us about what you've been doing there, because that's obviously a big concern for folks who are thinking about sustainability and thinking about the social aspect of ESG as well.
Correct. Absolutely true. And I think, since many years we have focused especially on farming practices because child labor and tobacco growing is a major concern for us, for the industry. And I would say